Killick 102.5 FM. Good morning, and we're back on Community Conversations. This is our monthly Homeowners Corner segment. Now, normally we do this a little earlier in the month, but for scheduling reasons, we did have to reschedule to today. But that doesn't matter. We are here now. And of course, as always, joining the studio, we have the lender himself, Corey Mills. And today we're going to talk about down payment assistance because you may be in the market to purchase a home, and you be probably one of the questions that you're having is, well, how do I come up with money for the down payment? Well, we're going to get right into that. So first of all, just what is down payment assistance? Well, in fact, before we even go into that, just kind of explain how the down payment part of the home buying process is in general.
Okay.
And pull the mic up a little bit.
All right.
Yeah, you just lift it straight up.
Okay.
Yeah,
all right,
there you go.
Appreciate it. Well, good morning, everybody. Mr. Kell, thanks for having me again on your station. We can go over this down payment assistance program. So how that works is typically when you were dealing with your loan products, whether it's conventional, FHA, things of that nature, they do require a down payment. Let's say with a conventional loan, you might need 3 to 5% down payment to go towards that loan. FHA, you're going to typically need a minimum of 3.5%. VA and rural development, you don't need any down payment on those, but there are more qualifications for those particular loans, whether it's location or VA credentials and everything. But typical on your FHA and conventional, you're going to need that down payment. And what we come to realize is in this climate, in this market, I mean, a lot of people that don't have down payment funds, whether it's that 3.5% or the 3% or the 5%, they do have some options out there. And when we have different down payment assistance programs that we will go over today that are available to customers, whether they're in the state of Arkansas or Tennessee, Mississippi, wherever they might be, we do have some options out there that could, if they qualify, could assist them with that down payment. So what a down payment assistance is down payment assistance program is pretty much going to provide financial aid to help home buyers cover the upfront costs of purchasing the home, making home ownership more accessible. Again, as I mentioned before, a lot of people might not have that 3.5%. So let's say, for example, if you did a $200,000 house, that's pretty much 3.5% of that is going to be about $7,000 that you have to come up with at closing, in addition to your closing costs. So we're looking at that $7,000 that you'll have to have out of your own pocket or your own funds to put into that investment. And then the loan you're going to have to also have the closing costs that we can touch on at a later date. So that can get pretty expensive, whether it's just in this scenario on $200,000, $7,000. Then depending on your closing costs, that could be an additional $5,000 to $6,000 to $7,000 as well. So these down payment assistance programs pretty much help those that don't have it, and it's a great opportunity for those that's not sitting heavy on their finances or do not have access to 401k savings or things of that nature. So, yeah. Let me see. So it's more so also, it's not just for first-time home buyers. It's also, we have programs out there that assist those that are going into second properties as well. So the state of Arkansas, I want to say, we have, so let me go back a second. You have different type of down payment assistance programs, whether they're federally funded, state funded, or locally funded. I want to say Jonesboro has one. I don't know if they're funding that again this year. I don't know if they have funds or not. But the state of Arkansas, we do have the Arkansas Development Finance Authority that offers, they have their Move Up program, Start Smart, and then they also have another standalone program that they have. So with those are different programs that they offer within the state of Arkansas, where you can get up to between $1,000 to $15,000 to assist you with your down payment, and not only your down payment, but you can use some of those funds as well to go towards your closing costs. So let's say typically, let's say you had that situation where you, again, the $7,000 on $200,000 for FHA loan. Typically, if you get with your realtor And if that seller is willing to agree to pay some of your closing costs on an FHA loan, that seller can pay up to 6% of that actual closing costs for the FHA product. So now it's only FHA Pacific. So if you have a seller on that, let's do just $200,000, you're responsible for that 7% up front. I mean, that's 3.5%, which is 7,000. Then you're going to be responsible for the closing costs. Now, if you get you a good agent and tell that agent, hey, I'm not cash strong right now. I'm kind of hurting on, being able to come produce these closing costs, and I'm kind of hurting on these down payment funds as well. So what we'll do is we'll try to apply for one of those funds. Depends on what program it is, and then you can also have your agent to negotiate with the seller of the property to pay up to that 6,000. That's 6%. So let's say on 200,000, 6% is going to be $12,000 that they can pay towards their closing costs. So if you do it right and correctly, now you can have some of those situations where if the numbers work out, you can come to the closing table with nothing. The seller pay your closing costs, and you have those down payment assistance funds to also assist you with your down payment. So if you work it right, the misconception is with a lot of people, well, I don't have the down payment, I don't have closing costs to put towards the transaction. So really, I feel like I'm not a candidate for, purchasing a home. So let's take that conception out the way, because there are programs out there to assist you. And if you just have the conversation with your lender, myself, or your agent, and we all see how we can work that deal to make it to where if you're not sufficient enough with your down payment or your closing costs, that we have different options out there to help you with the transaction. So great products out there. Again, like I say, we have the federal, you have state level, and then you have local level as well, as far as they can assist you with the down payment.
Okay, so what are some of the pros and cons of down payment assistance programs?
Okay, so that's a good question. Some of the pros, the pros are you don't have to have that money up front. You can apply for it. You have to qualify for it. So you have to meet within the parameters of that particular guidelines for that actual second lien loan that you're getting. So those are the pros. You'll be able to have access to those funds. Now, some of the cons are you have to pay it. We have some forgivables. Let me go back a good bit. You have repayable, which means you have to repay that loan back. If you're doing a second lien loan for that down payment funds, you have to pay that back. Sometimes the terms are 10 years. One of the cons of it is it could be a higher interest rate on that second loan when you get that. But we just really have to look at your particular circumstances. So let's say I'm gonna go back to that one we were discussing with the state of Arkansas as far as the Arkansas Development Finance Authority. What they have that Smart Start, and with that, it's a low interest rate, and I think that's one of the lowest interest rate out there, period, when you're dealing with any type of down payment assistance program. Now it is you do have to pay it back. So the con of that is you might have a higher mortgage payment every month. Well, let me not say mortgage payment, because you're going to pay your principal, interest, tax, and insurance on your first lien, which is going to be, let's say, if it's the FHA loan. Then on the second, which will be a down payment assistance, we call it a second lien, you have to pay that back as well. So that's one of the cons of it. You might have to have a higher expense going out per month. But you look at the justification behind it is you don't have, to come out with all that money up front or back on the closing costs as well. So the pros and cons of that's how you have to weigh it out pretty much. So again, you're just going to have the different programs out there, man. And we have several here at Fairway. We have our what we call our Arrive Home. We have another program, we use Shanoa funds. Now, these are FHA Pacific So we can use these only towards FHA loans. Arrive Home, we have our Shanoa funds, we have our Home 100, then we have another product we call our NHF loan as well. Now, some of the pros and cons of the products and the comparison of these products, let's say again, I keep referencing back to that state of Arkansas, the AFA, Arkansas Development Finance Authority. I keep referencing that because we use that a lot. That's one of the hugest funded grant programs out there that we use for our down payment assistance program. So let's say with that, your guidelines, when I say guidelines, let's think about FHA is going to have their guidelines, or conventional loan, whatever you're using as your first primary mortgage. And then you have your second, which is going to go through the grant or whatever it's going to be. So with the Arkansas one, they have a cap on how much your debt to income ratio can be. We talk about the debt to income ratio previously. So we're looking at what the AFA, when I say AFA, Arkansas Development Finance Authority, they have a maximum debt to income ratio of 45%. You cannot go over that by one point of anything. You got to stick right within those guidelines of 45%, where their guidelines are 45%, and your credit score minimum has to be 640. So that's one of the ones you're kind of boxed in on, how far as credit score, being qualified enough, high enough to get that. And then also that 45% kind of keeps you within a certain loan amount per month that you can get on your purchase. So with these other programs I mentioned, these are some great programs. They are repayable and non-repayable, meaning that with the non-repayable, over 3 years, I say if you don't miss any of the consecutive payments, they'll consider that forgivable and let you get that pretty much that second loan amount for the down payment pretty much free. You don't have to pay it back. So some of the advantage of these other programs that we have, those other four I mentioned, you can go below, minimum credit score of 600. Again, I mentioned with AFA, you have to have a 640 minimum credit score, but with these other ones, you can go lowest credit score as of 600 minimum. Also within those programs, some of them will allow you to go up to 50% debt to income. Debt to income ratio. So it kind of gives you a better qualifying ratios as far as those that want a little bit more purchase or credit score is not as high as 640. So again, I just want to stress that there are programs to assist you all with down payment. And then if you're worried about the closing costs, remember, you can always try to negotiate your seller to pay your closing costs for you. Now, they are different amounts or top maximum amounts that seller can pay. We call those seller concessions in this transaction. So we have to really know what loan program we're going to use, how much you're going to pay into the product that will determine how much that seller concession will be maximum as far as that loan product. Again, with FHA, I know the maximum is 6%. So we're wanting to negotiate that with the seller on the front end. When you're looking for properties and you know that you're going to go with a down payment assistance program, you know that your closing cost funds, as far as you as an individual, you don't have those funds on deck, you might want to just get with your realtor and make sure that he or she can negotiate that the seller will pay your closing costs. So remember, there are opportunities to help you if you just really want to focus on, okay, my monthly budget is going to be this. This is the max that I feel like I can afford. I don't want to go over this anymore, not a penny more, or have you some headroom of maybe $50 or $100, whatever it may be. So if you're just focused on what my monthly budget is going to be as far as my housing expenses, what can I tolerate? Don't worry about, again, the down payment, the 3.5%, the 5%, whatever it may be. And again, think about your closing costs, because we can always try to negotiate those in and get those programs to help you out with the transaction. And then again, we can get the seller to see if they will pay your closing costs. Right now, we're knowing that the market is kind of tight. We're seeing more transactions, more closings. So it's still moving. Inventory is still moving. But if you're one of those and you feel like I want to buy me a house, but I just don't have a hefty savings. I just don't have enough money for down payment. I just don't have enough money for closing costs. Speak with your lender. Myself, hopefully, and see what programs are out there for you. Again, they're based off your credit score. They're going to be based off, what your debt to income ratio is going to be. So there are ways to work around and try to get you into a house if you don't have a large savings account.
And I think that's real valuable information. It probably gives people hope because they probably think out there who may otherwise be like, well, I don't have any of this stuff, so I'm just not going to worry about it. But they have that desire to want to still get a home.
Yeah. A lot of people don't know that. Like, my seller can pay my closing costs. Yeah, they can pay up to a certain amount, depending on the actual loan product. So don't think that you cannot qualify for a house because you don't have $20,000 saved up, 20% saved up. No, that is not the scenario. Get with your lender, get with a lender. Hopefully you can just give me a call and we'll just go through different scenarios for you. Now, you want to be transparent as possible. Let them know your situation. Hey, when I'm interviewing a borrower and I get an application on them, we're going to ask those questions. What is your savings looking like? Do you have money for a down payment? Are you prepared to do that? If not, you can still options.
Yeah, and you can say, well, you may not be ready right now, but here's some stuff that you can do to get yourself in a better position, and circle back a few months down the line. Right.
Or if you got those credit scores and you're looking at your budget fits within the qualifying ratios for that particular loan product, let's shoot for it. If it's not anything that we can do now, again, like you were saying, Ms. Kell, we will revisit it later. If it takes us 2-3 months, well, let's say you that candidate, you got a 600 credit score, you know what your budget is, but you don't have a savings saved up to pay for a down payment or pay for your closing costs. There are different products out there to help you. So don't be afraid to talk to a lender about that. Ask them what programs do they have. Now, all lenders don't participate in these programs or offer these programs. So I know what we have here at Fairway. We have those additional ones that I mentioned earlier outside of the AFA products. So, there are programs to help people get into houses. So don't feel like you're left out because you don't have the hefty savings and all that. Give me a call. Let's speak about it. Let's see what you can do to help you get in those programs.
All right. Well, thank you so much, as always, for joining us. And this has definitely been a great episode. And I hope that it helped and blessed someone. That's going to do it for this edition of Community Conversations. But remember, this is All Gospel Wednesday. We have great gospel music all day long. You guys have a great and blessed day. This is Kelly Kate on 2.5 FM.
All right. Thanks. All right.